Scott. Hello, Andy.
Hey Steve, what's up, buddy?
Counting down the
Besides the
days
market.
to a short weekend. Yeah.
Yeah.
Hello, everybody. Thanks for showing up. The November 21st Trade of the Week webinar is commencing. As Scott said, if you can't make it, or if you have to leave early or you're late, it is being recorded. So check back a couple hours after the completion of the webinar on our YouTube web channel, and you'll probably see a nice fresh copy of what we're about to talk about here. Slide number 2, very familiar to people who show up late. Disclaimer, just reminding you that we are content publishers. We're a software company, and we're going to demonstrate some cool technology and some ideas happening in the market, but it should not be construed as investment advice. If you need financial investment advice for you and your family, you got to seek out the brokers and the RIAs. That is their job, to handle that stuff specifically. We are a little different, so we just want to remind you all, please don't construe what you're seeing here as financial advice, because that is not the intent. Our intent is to show you some cool software. Our intent with this slide is to remind you why we pride ourselves in our customer service. Those of you that are new, please be aware that when you sign up with Trade Ideas, just a simple 1-month subscription gets you a free one-on-one hour. We call it the hour of power, where we call you up, or we Skype you up, and we share our desktop, or we look at your desktop, and we just really get you situated and get you going, drop some stuff into your cloud, show you how to do a few things, and really custom tailor it to the hour that you want out of it. And that's a $99 value for anybody that comes along and wants to do that, that's already had that. So point being, when Scott gives you guys that promo code at the end of the webinar, please be aware that it does include a 1 hour of time with us, and that is, put a value on it. It's a $99 value. So with the 15% code he's going to give you, it's a pretty good deal for the first month. You're going to get a lot of concierge and a lot of onboarding, and that's what I'm going to talk about here real quick. Aside from the one-on-one hour that I just went on about, we've got Barry's live trading room. Barry Anderson once a day during market hours, a little before, signs in, and it's a free service. You don't have to be a Trade Ideas user. You don't even have to have an account. You can just come on in and join and pick up a chair and watch and listen. But Barry is very adept at skillfully trading his own account, moderating the room in a very heavy hand, making sure that people stay focused on the stock market, and also demonstrating Trade Ideas technology and sharing links and solving issues if people have questions. So beyond that, we've got the webinar series. Monday was myself and Jamie. Yesterday, hosted by Jamie. Today is hosted by myself along with Andy. Wednesday is typically Dan and Brad talking about upcoming versions and new features. Trading Studio is all Andy and Jamie sidekick on Thursday, talking about what happened during the day and maybe some other tidbits. And then Friday, there are no webinars, but we have a 3-hour weekly recurring support session from 11 a.m. to 2 p.m. Eastern. And this is perfect for maybe somebody who signs up on a Monday or Tuesday and they don't get their one-on-one until maybe early next week. But hey, every Friday, although I will give you a caveat, this is the Thanksgiving week, so there will be no Friday tech support session, nor will there be a Thursday webinar this week. But any other non-holiday week, we're available to you guys for 3 hours from 11 to 2 Eastern. Come one, come all, same format, go to meeting using the GoToWebinar question box, just like you guys are doing right now. And the waterboarding session has been discontinued. Okay, I wasn't aware that we had a waterboarding session. Hopefully that's a joke. But here, again, it's just a nice weekly layout, daily, weekly, of the ways in which we can onboard you guys and get you up to speed and get you going there as soon as possible. Because of that, we keep this slide in here. The parabolic growth of the net Trade Ideas subscribers really started to kick off here at the arrow. This arrow shows when I joined the company, but that's not the reason for the expansion. Well, I'll take partly credit. It's part of the reason. Another cog in the wheel, but the AI was introduced in January 2016. We started doing a lot more webinars and really focusing on a lot of the things I've been talking about to make sure that our product gets in the hands of people who can get familiar with it very quickly. So we're very proud of this slide. It continues to have parabolic growth, and we are pretty certain that people like our product. You really, really like us. Brokerage Plus is an adjunct tool, but you got to have an interactive brokerage account, and you have to have a premium Trade Ideas subscription. And inside the premium subscription, there's a module called Brokerage Plus, and it actually is connected to Interactive Brokers, and it is still in beta. We're still working out a few kinks. However, I want to remind people this is not a tool for beginners or intermediate. It really is a tool for advanced, intermediate, or advanced altogether. My advice and any advice is, learn the market, learn the tools, learn how to crawl before you walk, and then learn how to walk before you start jogging. I would consider Brokerage Plus on the jogging timeline of things. So what you don't want to do is get in over your head on a tool that is pretty advanced and pretty cool, I might add. Think about it. You're able to take any Trade Ideas scan and immediately turn that into a trade as it becomes live. But there's a lot going on behind the scenes to make that done correctly and make sure your risk management and all that is intact. So please, if you're interested in this, you can find more information at trade-ideas.com download, or you can email us. We'll give you the email at the end of the show. But again, it's an intermediate tool and should not be taken lightly. Get a drink of water here. Jeffrey, I do not know if it will work with an IB demo account. It's a good question. You can email us info@trade-ideas. It will?
Mm-hmm.
Good
I've
to
done
know.
a session or two with it does work with a demo account. Mm-hmm.
Okay, good to know that. Thank you. All right, there you go, Jeffrey. All right, Brokerage Plus. And then as we enter into the theme of our webinars, Trade Ideas kind of considers ourselves part of this great quote by Paul Tudor Jones, and that is that no man is better than a machine. However, no machine is better than a man with a machine. So man and machine, the centaur, the human, the cyborg, whatever you want to call it. We are still discretionary traders that have to make decisions and have to manage risk and decide when and what to do. However, our technology, including the AI, is a great sidekick as a machine to help simplify and show us the probabilities and help us extract and frack for alpha in the market throughout the day. So love this quote. I don't know if I'll ever take it down, but this really is the theme of what we're trying to do at Trade Ideas is help the human being trader with a machine really simplify things. And I know Andy agrees. I really wish we had this in '98 when I first started trading, and I know that Jamie feels the same way. So today, what are we going to talk about? Kind of the typical template, little market recap, interesting day in the market, holiday recap, and I'm going to show you another tool and maybe try and point your eyes towards a way in which you can use that tool on holiday. The trade of the week this week, thankfully, did fire and is working and going in the right direction. We'll talk about the genesis of that trade, why it was selected, how it was selected. And then I'm going to kind of segue into a scan that I just built just last night, and I'm just kind of playing with it, but I'll show you more about it, and this will make more sense when we get to it. So I'll just wait until we get to that segment and explain this top list that I'm building to try and, once again, man and machine, use the machine to drill down and give me a short list of good setups and good ideas. And so I'm going to share some thoughts with you on this. And then usually towards the end, we have 5 minutes or so for chart requests. We may take 3 or 4 depending upon how many people chime in, but hold those symbols until we ask for them. And when we go to chart requests, if we ask for symbols, it always helps if you let us know you're currently long, currently short, or thinking about getting long, thinking about getting short, any other color. We'll do our best to try and put another set of eyeballs on that chart and give you some food for thought on the stock of interest for you. All right, let's minimize that. And let's go to the market recap. And broken record, path of least resistance certainly remains up. That's not a true candle, actually, that washout candle, because we gapped up a lot more than that. I'm not sure why it's showing it like that. But again, once again, the trend line continues to stay in perfect concert with the price action as we come through. I'll try and line those up again. Basically, we are still intact on this trend line. For the most part, the price action is a bit above it. So at some point, we could see some sort of a pullback to the trend line, or maybe even sideways action, let the trend line catch up. But in my world, that trend line is still really probably the most significant line. I just erased a couple lines. I'm going to keep this one in. Major resistance became major support. That's a pivot. Right here was a major resistance where the market actually did break out. I'm going to keep that in there. And this back here is just kind of more of an intermediate no man's land pivot. So I'm going to leave that in there as well. Try and clean that up a little bit. So what happened today? Well, I don't know. Overnight, I guess the central bankers got a funny tickle and decided to maybe goose the European prices. But nonetheless, we woke up to a gap this morning. And gaps can be difficult. When you're trading, a lot of times you feel like, oh, chase the gap. All the stuff I had on my watch list, all my triggers, the price opened up and just ripped right through it. Do I really want to jump in here and chase a gap? So that's the question that a lot of people had to ask today, because if we look at the intraday chart here, 15 minutes, 30 minutes, 45, and flatline. Okay, so you basically, this was your moment of opportunity here, the first 30 minutes, 45 minutes of the market, if you decided to chase a gap and go long aggressively, because after that, if you're trying to look for setups back and forth, well, the backdrop of the market didn't really give us a whole lot, but a pretty good flat line for about 5 hours. And that was the same also with the Dow, a little bit more of a bowed shape there in the Dow, and we didn't look at the S&P yet on the intraday. Same as the NASDAQ. 1 hour of chase the gap up if you dare, and then flatline for the rest of the day. I'm kind of setting this up a little bit to talk about Holly, because when we get to Holly, the AI, we have noticed that many days when we have a gap up in the market, either the trade selection is slow to get started, or by the end of the day, there's just not a whole lot of meat on the bone. For some reason, well, not for some reason, but the reason that I mentioned earlier, the AI is having the same thing. The AI was all set to go with maybe some triggers, but a lot of these stocks may have gapped up through their triggers, or the giant gap itself was a filter that kept a lot of strategies from actually firing. So, it looks easy on the daily chart, but gap ups are not easy, because a lot of times they can turn right back around, as they have in the past few weeks, come in, fill the gap, go negative barely, and then the buyers come back in the afternoon. But that's not what we saw today. We saw a immediate attempt to chase the market and gap it up, and then sideways action for the remainder of the day. The winner of the day is IWM. IWM was on its actual deathbed way back here, although interesting to note, it did fill its gap back here where I'm highlighting around the W, which was an interesting level, and bounced right off of it, and just without a doubt, so strong. 4 days of just gap and go, gap and go, gap and go. So now the IWM has essentially caught up. It's no longer the lagger. It has caught up to the SPY. It has caught up to the Qs, the NASDAQ, and the Dow for making new all-time highs. So here we are, ladies and gentlemen. You got your S&Ps, you got your NASDAQ, you got your Dow. Actually, Dow quite didn't make it today. It peaked its head above but didn't close, but intraday it was there. And the Russell 2000, all trading at all-time highs, never been higher for the most part. All right, so that is it for the market recap. The path of least resistance remains up. There's no reason to be throwing any caution flags up here. The only caution flag I really see is that the spiders are getting really far ahead of their trend line. At some point, this trend line may come back into play, and we shall see. I might be going out on a limb here, Andy, but you and I have been through so many seasonal Thanksgiving Day holiday trades, the Friday half day. And is it surprising to you if I were to say a lot of days in the past, looking back, it seems like there's no sellers on those days. The
Oh
stocks that
yeah.
start off strong just seem to kind of trend
Yep.
strong for the day. Now, I'm not trying to make a prediction, guys. I'm just kind of giving you a little trader's almanac of what we've seen over the years on holiday shortened Christmas Eve days or holiday shortened Thanksgiving Day after days. The sellers just don't seem to be there. So don't be surprised if you see a stock that's been strong and that came into the day strong and just continues strong all day long with hardly any pullback at all. I don't know what it is about these holiday shortened days, but it always seems like I'm nudging Andy saying the same thing. Jeez, look at these
Mm-hmm.
trends. These just 2.5, 3 hour simple trend, no pullback. What's going on there? So that's coming up, and I just wanted to kind of maybe give you guys a heads up on that. It's not a prediction. It's just kind of a heads up to look out for. So, did I miss anything, Andy, on the
No, but I
market?
want to add something. If you put up a IWM real quick, because I've kind
Mm-hmm.
of been talking about this over the last month or 3 weeks or a month. Typically, guys, if you heard me talking how the IWM was going sideways, actually kind of trading down, looking like it was going to go lower, and that's usually not how tops are made.
Yeah,
It's usually more of a kind of a P or
a
a
euphoric,
TP type top, yeah.
a euphoric blow off. Uh-huh.
Exactly, and I see so many people and traders in the past that would get short on these levels, thinking, "Oh man, I got a very little risk here. I'm picking the top of the market." And I said I wouldn't be a bit surprised if soon this doesn't go back to highs, because it's usually not the way you see kind of a top being built, where it just kind of goes sideways for a while and then rolls over. For all the shorts who easily got in and didn't have any pain, well, now you see they're experiencing the pain, and probably a
Yeah,
lot of them got out today. Hmm.
if you guys remember the March 2009 low, that came in a capitulation to the downside. People were just literally throwing up their shares, their shoes, whatever would come out of their mouth, get me out. Market world's going to hell. And that was a capitulation to the downside. Well, believe it or not, a lot of times markets can turn on tops with complete euphoria and disregard for risk, where you're just like, okay, this is unbelievable. Look at this market go, and just have an upside capitulation. So that's really what we kind of want to be on our toes for, is that one day where we just all shake our head and say, I cannot believe this market is up that much this day. So keep an eye out for that. That's probably the day. I don't know if it's a day, a week, a month, a year, 2 years when it happens, but the turn in the market probably will come off of a giant TP top of euphoria, up and back down.
Hmm.
I just saw a quick question come in. What does it mean to fade the gap? Fade the gap. It means, well, kind of what we did right here. IWM filled. I think you mean filled the gap,
Well,
Christine.
no, I think he's talking about fading a gap, a stock that's gapping up, and you're anticipating it's going to fill the gap, so you fade it, you short it.
Okay. Okay. So two different things there. Fill the gap
Hmm.
is what we've got right here on IWM. The stock price came back and filled the price void. Fade the gap is what did not happen today. It very well could happen where the market gapped up like this, traded up for 5 to 10 minutes, and we've seen it, like I said, many times in the last few weeks. The sellers come in and close the gap. And so going short on a big gap up open, that would be calling fading the gap. I think that we're on the
Hmm.
right track there. Okay. Bill. Normally I don't do this, so I'm getting kind of, I'm looking at the questions box. Bill, I had the best trading day with Trade Ideas scans, almost 2,400, even with small typo on the hotkey. It was a $600 mistake. Isn't it funny, Bill, how those typos or those fat fingers always go against you? They never seem to go for you. But congratulations on a good day. I hope that you're starting to see, the market, the forest through the trees, the market through the fire hose, however you want to call it. But yes, your comment rings true. I love to hear that the Trade Ideas is helping the human and the machine come together to make sense. But yes, when, when we get caught in earnings, or when we get caught in a halt, or when we get caught with a fat finger trade, for some reason, trading gods never really seem to smile on us, do they? They always seem to take it away. Okay, with that said, let's go to Holly. The AI first glance today is always the first thing I take a look at, is what is the mix. I thought, well, this is interesting. We've got 3 shorts and 6 longs. But by the time the day finished, we really had a long bias for the most part of the day. So Holly, it took, if I go by time here, well, it took about 20 minutes for 2 trades to come in, maybe 45 minutes for the third trade to come in, and they were all long. So they were basically going in the same direction as the gap on the open. But then again, once that hour, as we're looking here at my spiders chart, once that hour kind of came and went, a lot of sideways back and forth action. So not surprised today if I go to risk off on the histogram here. The Holly exits is risk off. We had a little bit of euphoria in the morning and then just a lot of choppiness for the rest of the day. Okay, so that histogram is kind of a good visual of what happened here on the gap up and then the sideways. The risk off, of course, which is what would happen if you held on to the Holly trades going into the close. Well, yeah, there's some meat on the bones, but you know, it's a tough one because I want to point something out to you. You guys have heard me say there's 5 different exit reasons. We've got timed exit, the shot clock goes out. We've got reduced risk, which means the price isn't doing what the AI thought, so we're going to cut it early and scratch the trade or save as much as we can. We got profit save, which means trailing stop. Price is moving wonderfully in our direction, but now pulling back, so a profit save is like a trailing stop. And we've got target hit, which we didn't have any of today, but then we've got stop hit. And I constantly reminding people, I don't like to argue or I don't like to second guess stop hit. So it makes it kind of tough to look at this trade here that put $1.67 on the risk on category. When we break it down, it was just like a perfect comedy of errors, essentially. Here was our blue trigger on the first candle, and then the second candle came down and essentially kissed to the penny the actual stop price of 14.68 and then bounced back on its merry way. That's a tough one to really look back and, you know, talk about how it could have been done differently because, you know, I've tried to preach all along, don't argue with stop hit. Let the AI help us manage our risk. And so it's unusual that the risk on has a green profit, but the majority of it is at $1.67 in this goofy trade here that popped up and pulled all the way back and stopped out early and then kept going. So not a whole lot to really do with that one. So we're just going to kind of chalk it up as today was a day that, you know, Holly didn't make much progress in the long run. She's still outperforming. The casino odds are still in place. But before I go to the next thing I want to do on Holly, did you have anything you wanted to add here on the AI, Andy?
No, other than I've said over and over again, be careful on the gap ups. It throws off a lot of the settings. That you know, a lot of her settings on these strategies are based on you know, the prior day's move and so, or I mean a 5-day range or something like that. And when you have a big gap up like that, it throws off a lot of the strategies. But you know, just be careful when you see it. That goes for any type of trading on the big gap ups.
Yeah, and a lot of strategies probably have a maximum gap up filter. Like if this thing gaps up more than, you know, 1%, then don't do it. Don't chase it. Does AI give targets like for IWM? Does AI give? Yeah, AI always gives a target. If we go into that trade I was just talking about, we see 3 things here on the intraday chart and the daily chart. We see the blue strip, which was the entry to go long. We see the arrow, which shows us the actual candle. It was on the first candle of the day. And then we see right below that, we see a 14.68 stop, that red line. Let's take it a step further. This was part of the buyer's stepping in strategy. And on this trade, look at my column here. The stop loss was only going to be 25 cents. That's exactly what the visuals here represent, a 25-cent stop loss. But market being the market, things being the way they are, it bounced straight back up. And look at this. You asked me if there's profit targets from the AI. There sure are. It's right there, and I'll draw the line and look how close we got to it towards the end of the day. But we didn't hit any profit targets today. But that's just for the AI. I mean, you guys can type in anything. Let's just type in the trade of the week, which we'll get to. But take a look at this histogram, not only on, this gradient color, not only on the 15-minute intraday, but also on the daily. These are the same values. So if it's not coming through the AI, if it's just a stock that you like to follow and you like to type in, you like to monitor First Solar, okay. Well, First Solar, both on the daily and the intraday, is telling us If you like First Solar here at 60.21, the trade ideas technology and logic is telling you that right here, at the bottom of this gradient, 59.75 should be your out, and your target should be the top of the blue area, 61.21. So now every single symbol, whether it's a Holly generated symbol or a symbol that you have typed in on your own, you can get target and profit loss and smart stop and profit target. All right, let's see here. I don't know what the target is for IWM, because if we put IWM back up, when we look at targets, we look left. We're at all-time highs. So the target for IWM, sir or ma'am, is higher. That's the best answer I can give you. The target is higher. There is no resistance up there to look at. All right. Okay, so here's what I wanted to do now with Holly. We're starting to get some more functionality to where you guys can dig a little deeper or dive into what's going on. We don't necessarily have a spreadsheet where you can just look with a magnifying glass at every single trade, but here's what you can do. With the newer version, and I'm running almost the newest version, but I'm running version 4.2.1. I know there's a 0.13, which is a beta. It's available, and that'll have it. Why is that important? Well, if we right-click inside of Holly's trades here, we have a new menu. History. Let's just do something really simple. Let's go, not yesterday, but let's go to time frame, and let's just say 10 days ago. Show me the stocks that have been traded from today's closing bell all the way back 10 days. That's already been set. I'm going to click OK, and look at that. All of a sudden, we've got this giant list. Now, why am I showing you this list? Well, one of the things that's been kind of interesting to me is to know that here's 10 days worth of data. I'm going to double click on strategy. And I just happen to have kind of noticed that, you know, float on and quarterback and another one, bullish pullback, have been some pretty decent strategies. So what I'm showing you guys here is that you can now do what I'm doing, sort by strategy, but let's pull it down so we can see our charts. Zoom out a little bit so we can get a better feel for the charts. And let's just go through a few here. I'll start off with bullish pullback. Okay, here's our first one. Look at this. 5 days ago, Holly said a buy. And remember, the AI is closing it out at the end of the day. But I'm trying to see what strategies might have some nice residual 3 or 4 or 5 day follow through for swing trades. Maybe sell half on the Holly exit. Maybe the other half can go on a swing. Well, that one worked out pretty well from this day back here. We've only got 2. Okay, so bullish pullback number 2. This was also 4 or 5 days ago. Here was the buy. Holly probably made some money on that day, got out, but some following through. So bullish pullback is showing me a little bit of interest on that. Okay, I'm not going to go through all of them, but quarterback is also one that's been really performing well lately. Here was quarterback 3 days ago on the daily chart. Some more alpha beyond that. How about this one? This was just yesterday. A little bit of upwards action above that. Here's quarterback 3 days in a row. Buy, and buy again yesterday. But for the most part, the price has been moving higher on that one. Here's an anomaly. Holly made some money on this particular candle, but these 2 days fell back. So obviously not every single one of them is going to work. But as I go through these, I'm seeing kind of a pattern. Once again, nice simple day for Holly here, but 3 or 4 days of upward movement on the quarterback. Here's another quarterback that's, for the most part, flat, maybe down a little bit. Same thing here. This recent quarterback from 3 days ago, the price is moving higher off of that. And again, this is probably the same stock we looked at earlier, DNRA. So there's that one. What was another one that I thought was interesting? Float On has been doing some interesting things lately. So if I go down to Float On, let's see if we can find some. Okay, so here's 2, another one. So 2 days in a row, and the price is higher on the Float Ons. Anomaly here. Well, funny backstory on this one. This one was close to becoming a trade of the week, but I wasn't comfortable with some of the data that was coming through there and things that we can't predict. This is the market in real time, folks. Midday today, SGY comes out and says, hey, we're going to merge with somebody, and this is the effect that it had. So You can't handicap these kinds of things. You never know when news is going to come out from a CFO or a CEO. But nonetheless, we are on the topic of looking at float on as a possible strategy. Zoma, let's see, that one pretty much about the same as where it was. AYX, there's a funny story in that, but I'll save that. It's gone higher in the last 4 days. This one only was here yesterday, but followed through today with some nice movement today. Float, same thing again yesterday, some movement today. So float on, quarterback, buyers stepping in, and then there's another anomaly that didn't work. But I think you guys saw about 80% of the stuff I was looking at there had some nice continuation throughout the remaining 5 or 6 days. We actually have David Ferriet, one of our managers, actually has a third party working on a white paper doing exactly what I just did, breaking down a lot of these strategies and looking to see a lot of what ifs to try and give us some more ideas of longer term holds and longer term strategies and which ones might work better for longer term. That's in the process. That should be forthcoming at some point in the next few weeks, but that'll be interesting to see that. But in the meantime, all you guys got to do is just right click, go in here to history, maybe grab a 10-day time frame, sort by strategy, and start taking a look at some of these strategies and seeing if you can get a feel for certain strategies that have a majority of the time the day after and the day after and the day after that are continuing to move in the right direction. So hopefully that made sense to everybody. Andy, anything you want to add there?
No, that's a great exercise, and I would definitely take a look at some of those things like he was saying. And really, guys, you can go back on this thing for like 65 days. So there's plenty of data to be had and looked over.
Yeah, and again, I like the ones, the one and only short today. But again, I like the ones that are called a fade entry. Look at this short. It actually came from below, popped up, hit that blue line, and then that was a short call. Even though it made only 8 cents on the risk on. What my point is the bullish pullback, the quarterbacks, those are fade entries. Those are not breakout entries. Those are entries looking at stocks that have a strong chart, but waiting for your pitch on a pullback or some sort of a way to try and gain as much of an edge as you can. So the bullish pullback, buying on a pullback, quarterback, those are the kind of entries that are interesting. Okay.
Kay has a good question, segueing into TOW.
Oh, yeah, well, it's a good segue. It's the right time. So last week we did not get NFX to fire. So last week we had a null, we had a void trade of the week. Look, my blue line is still intact. For those of you that know, a blue line means a working price alert, and that red candle was last Monday, and we came in and did not trade above, so there was no trigger. And looking in hindsight, no harm, no foul. Energy kind of fell out of bed last week, and that pattern really never materialized. So last week was nothing. This week, we pulled GHL. We pulled GHL off of the trend change lubricant, which is where we have found a lot of our trade of the weeks over the course of the year. Let me give you a couple of examples. Maybe you remember Weight Watchers. That came off trend change lubricant. You may remember Square. That one came off the trend change lubricant. You may remember, actually Micron was a different one. I can't take credit for trend change lubricant. But where I'm going is the trend change lubricant is usually something that can give us, some good staying power throughout the year if we catch the right change in trend. And GHL was on the trend change going into the weekend. Now there's a couple things about GHL that I really, really liked. Okay, let's take a look. One, trend change lubricant is always where I like to start. Well, since we were talking about Holly buys, look at that. That's kind of interesting. On the gap up day, we had some news in GHL. Holly went ahead and did a day trade and bought the stock on that day, and it hasn't really looked back since. That was one plus. And then we had earnings. Well, earnings season was behind us for the most part now, but as you'll see, the earnings did kind of like IBM did, a couple of good days, just so you can see what I'm referencing, IBM, a couple of good days, and then back to fill the gap. So this is what GHL did, a couple of good days of earnings, and then back in a perfect gap fill. I drew the orange line to show you guys the perfect gap fill. And I bet you anything that little test of the gap on that wick was on the opening 15 minutes. I'm not going to go back and look, but I bet you anything that's usually where they try and tag those downside levels and run out the stops. And it's why you want to be really careful in the first 15 minutes, whether you want to pull your stops or not make any decisions to get out. Let the first 15 minutes blow through like a come out roll on craps. And if you can survive that first 15 minutes, it makes decision making a lot easier. I'll finish my thought and then I'll read the question. So the price action had earnings, gapped up with good earnings, pulled back, filled the gap, check box there, traded back up, some sideways action, and then traded back up to the prior high, a perfect cup and handle. So much going on here. Coming from the trend change lubricant, we got a stock that's 22% short the float, and it's not on there anymore because it's now moving above that. It's on here. We are 22% short the float on 27 million shares in the float, I might add. So that's a low float. There's some action there with 22% of that. And once they got above this green level, that was pretty much the pivot point. If I zoom out, hey, look at that. Prior support became future resistance. And if that future resistance had a cup and handle coming into it, well, the trade of the week said it was once again conditional. It was a conditional above a buy above 1950. And that's pretty much right where it opened on Monday, right at 1950, and hasn't really looked back. So I'm very happy with the price action on this one. I'm happy in that we've had two nice green candles, because ideally a good short squeeze should be numerous green candles on a daily chart as the shorts slowly unwind and don't give too much back. The only thing that I can say that's not ideal about this has been the volume. The volume GHL, hasn't really gotten much above 1.0 on the relative volume. However, today at a crucial point, take a look at today as it was making new highs going into the close here. I did a quick screenshot and I noticed that the 5-minute volume was at 900% and the 1-minute volume 200%. So it was going out on some nice volume at the end of the day. This is always what I want to see when a stock goes to highs. This is not what I want to see right here after a couple of red candles. You start seeing these giant 5-minute volumes after a half an hour of red. That's not what I want to see. I want to see these volumes show up at new highs on nice solid green candles. So the trade's working. It's working well. It's doing everything I hoped it would do. That's where we found it. One more thing, which will be a segue. When I look at some of these charts, I do look at them on a chart with some simple moving averages, which, by the way, is coming very soon to our charts, simple moving averages. But what I liked about the GHL is what we call the moving averages were fanned out. 10 is above the 20. 20 is above the 50. And that is a really nice looking look to me. It's like, somebody holding a bird in the palm of their hand, just kind of waiting for it to take flight. But when you have moving averages that are crossed up and crossed over, it's not as pretty. I like this look, the 10 above the 20 and the 20 above the 50. Those are called moving averages being fanned out. All right, let me read the question. Not a subscriber, but I somehow started getting your trade of the week, so I bought GHL at the price you suggested to go live. Also set my stop and profit exit for 50%. Here's my question. Do I keep moving my stop up? Great question. As a trailing stop, I'm using the Thinkorswim simulator. You made some good paper money on your suggestion. Okay, great question. Initially, our stop, I believe, is 1780. Let me highlight that, 1780. The reason I picked 1780 was because it was below this little hitch here. I don't want to see any fake. What the hell? You know what? They've gone to audio alert, audio commercials now on
free stock charts.
Yeah.
Yeah.
Oh, you're killing me. How come I can't get to it? Do I have something open? Oh Lord.
You can't go down and hit your Google in the taskbar?
Let's see if that worked. I don't know. No, I'm afraid another commercial is going to come through. Let me see if I can minimize it.
I think you got it there.
Let's hope so. Train of thought broken. So that was my original stop, to come below these congestion levels right here and give it a little bit of room down to here. But you make a great point there. Who asked that question? Kay. Stock did what we wanted to do. It broke through and closed above yesterday and closed above again today. So therefore, I'm happy to say that you could probably move your stop just under these levels right here. If you wanted to be even more aggressive, you could just say, you know what, if it comes back and dips much below that green trigger line, maybe that's my out. That would be a very, very conservative out. This would be the next most conservative, but our original line was down here, and you are correct. Since the stock is doing what we hoped it would do and is taking off in the right direction and has posted 2 closes above our trigger level, there's no reason that we can't move our stop up. Now, this thing has generated, I think, almost 4.5%. You know, we're kind of getting there, but I don't start thinking about trailing stops until we get up around 8 or 10%. That's how Andy and I used to run the Ditto Trade account, which was a mirrored account people could attach to. It's no longer in effect, but that was one of our hard and fast rules, was once we start getting up into the 7 to 10% profit range, it's time to start taking some off. But you raise a good point here. There's no need to leave the original stop loss down here intact. You could bring it way up a lot tighter, because the trade is doing what we expected it to do. If it rolls back over and breaks back down through, well, that's something that Holly would probably call, you know, a reduced risk, because it didn't really trigger enough profit in the right direction to warrant a trailing stop, but it did what we thought it would do. But if it starts getting squirrely and not behaving on us, we don't want to give it too much more downside. So you can definitely move your stop up on that. That's a great question. Okay. What channel is the trend change lubricant? You know, I don't know if it's in a channel. However, I'm happy to drop it into the chat window here. Normally it's on the PDF list. We have a PDF list of some cloud links, but I'm going to go ahead, unless you've already done it, Andy.
No, I was sorry, I was answering somebody else's question. I'm
just going to call it the trend change, and I'm going to put the code in the chat window there for you, so you have access to that. Does Holly generate sometimes multiple trades in the same stock in one day? It has happened, Ken. I think the most I've seen it happen is just twice, with 2 different alerts, and one alert might get an earlier look than the second alert, and it has happened. So.
It's happened several times. Yeah.
Okay, can you explain the definition of the trend change? Sure, I can. It's basically looking for stocks that are beaten up on the daily. And let's see if we can find a really good, here's a good example. Nice downtrend, but a base is coming in. In this particular case, we got a nice double bottom down here. And so the idea is stocks don't go down forever. You know, they go through cycles: accumulation, distribution, euphoria, fear, etc. So here's a stock that is, if you were to draw an imaginary trend line, we're breaking it with our eyeballs. So how do we configure for it? Just real quickly, it's a top list, which means it's nothing but filters, and there's no new high, no new low. As long as these filters are being satisfied, they're going to show up on this list. One of the reasons that GHL is off this list today is I'll show you. We'll start with that filter right there. The 35% position in range. Well, if I type in GHL in a position in year range, if I hover over this, what does that say? 34.8. It actually fell back a little bit. But back to my configuration, what that means is position in range for the year. 35% is our maximum, meaning we want to see the ugly, junky stocks, nothing more than 35% above its 52-week low. And it actually happened a couple of times today as GHL went to 2040 on highs. It no longer satisfied that filter. It was more than 35% above its low, so it dropped off. But that's the beginning, step one, how to find ugly downtrending stocks. Position in year range, maximum 35% or whatever you'd want to put. However, then we come right back and we say, all right, let's flip it. And how do we find the ones that are basing and turning back up? Well, position in a 20-day range is where we do that, where 0 is the 20-day low and 100 percentile equals the 20-day high print. So we just put in a minimum value of 90, which cuts out all the other stuff and just leaves the stuff that shows us it's close to a new 20-day high. So that is the genesis behind the trend change lubricant. And then guess what, guys? It becomes man and machine. It becomes the machine giving us the setups, and it takes the human to go, oh, this thing has a low float of 27 million. It's got 22% short. I bet you anything this line right here that was support and then became resistance, this is going to be the line where the short sellers throw their hands up and say, I can't take it anymore. So we could hope for a short squeeze above that line. So man and machine comes into play here, guys. You got to set our price alerts to create the actual ringing of the bell to let us know that something is happening that we want to see. All right. So that was the genesis and the idea behind GHL. The upside target for that one, I believe, is up here around 2450. Why was that chosen? Looking left, consolidation. And if we just look, risk reward, it's a nice 3-to-1 risk reward. Risk down here being 1, and then 3 of those same spaces up here to the upside. So anytime we can find technical reasons for a risk 1 to make 3, that's what we're doing here. And GHL is doing okay. Checking in with KWeb, which was a few weeks ago before the one that didn't trigger. That one actually did hit our target of 60. We popped it in right there, 60. And so when these things, hopefully, cross your heart, cross your fingers, hit their targets, something to consider, I've mentioned it before, considering selling just half and letting the other half run and see what happens. You'd be amazed how much it takes off of your mental anguish and psyche. And what should I do? What should I do? If you sell half for a profit, you've booked a profit. And look at that. You've given yourself the patience and the wherewithal to have a couple more days of upside movement on your second half. So it makes it so much easier when we're doing swing trading to sell half or a third and let the other third go, and then maybe the final piece, just leave that for perpetuity. Put that in the back pocket, hopefully, for the kids' education. But that was 2 weeks ago. KWeb is now up over 10 and 11%, I think. So hopefully we'll come up with another good one, and we can give you some good reasons next week. So I want to move on to something that made sense. Again, a segue. One of the things, why am I getting, there must be a config window open that is keeping me from doing this stuff. What is going on here?
Are you getting more commercials?
No, it's just I can't grab that chart, and I really want to grab that chart to do something. Ah, there it is. Hang on a second. Cancel. All right, let me go back. Let me go back to free, because I want to give you guys an illustration here again of what the stock screener that I started to work on last night is looking for. And just, some food for thought. Again, how you guys remember I mentioned I love the moving averages all splayed out. What was the word I used? Fanned out?
Mm-hmm.
Is that the word I had? Fanned, splayed, fanned? I can't remember. So how can we use trade ideas to try and find these setups? Because again, I love this look. We don't have a 10-day moving average on trade ideas, but we have an 8, and it's close enough. It's an SMA. It's just a shy away from this. And these are the kind of setups I love, where the stock is kind of going sideways in a tight range and getting close to that fast line moving average and starting to look like it wants to break out with the 10 above the 20 and the 20 above the 50. So I said, well, how could I try and emulate something like that? So I went ahead and I did create it. Let's just pull it out of the cloud here. And let's see if we can remember what I even called it. And there it is, tight range. Oh, I called it stacked, with the SMAs stacked. Fanned out, stacked, whatever you want to call it. So I created this top list. And let's see what I did. Since I've already created it, it's like a cooking show. I've already pulled it out of the oven here, everybody. I added 3 columns. Change from the SMA 8. Change from the SMA daily 20. Change from the SMA daily 50. And as you can see, what I'm going to do is I'm just going to sort by the easy one. Well, what is this one? RFP. Interesting. RFP has that look that I like. Well, I don't like to do this, but let's just do it. RFP. Look at that. Going sideways. The moving fast line moving average is pushing the price higher. The moving averages are stacked, the 10 above the 20, the 20 above the 50, and a nice tight range all day long. This is the kind of stuff I like. So by sorting, which we could sort by anything we want, but by sorting the fast line, which in this case is the 8, we don't have a 10, I'm looking at the lowest reading first. So RFP is only 4% above its 8, but it's 20 above its 20 and 49% above its 50. Okay, interesting. What about this one, FRX? A little bit different look, maybe not perfect. But here, HLIT. Let's take a look at what HLIT looks like. And
that was strong.
Oh, there goes the dang commercial again. Look at that. Shh, stop. There's the tight range, there's the price moving higher, and there's the moving averages stacked, and there goes the commercial, because I can't take any more of that. So how did I make this? Well, the idea was I just want to try and find something that's going to give me, again, man and machine, guys, give me a short list. Give me a small list of stocks I can look at and mark up and maybe even create a price alert on. But doing it with the basic premise of getting these moving averages stacked. So all I did was create a list 1 to 500, change from the close. I want them to be positive on the day. That's our easiest way to make sure the stock is green today. Change from the close, 0.01%. Relative volume, I want to see stocks that are doing normal volume, so I usually put that in there. 300,000 shares is our average daily volume. And then there's two components here. Component number one is I want to see a tight range. This thing right here is called position in 20-day range. So I'm putting it at the 90th percentile. And so it's hopefully getting ready to break out of a 20-day range, or at least getting close. And then here we go. Here's how we stack the moving averages. And these are all SMAs. I'm sorry, Waleed, EMAs are probably not going to be a thing with trade ideas. We're just going to keep it simple. If you want to do the EMAs, you'll probably have to do the external linking to a charting program that has the EMAs. Trust me, I'd like to have the 10 moving average, but I don't. I'm going to work with the 8. So here's what we're doing. I'm just saying change from the 8. I want it close, but not too close, 0.25. Awesome. So what does this mean? The price is at least 0.25% above the 8-day moving average, which would be the fast line or the 10-day yellow line that I was showing you on free stock charts, okay? Well, if I want them fanned out, well, then the 20 is going to have to be a bigger value. So now 2% is my minimum. The price also has to be at least 2% above the 20. And then on the 50, 4%. So you can see what I kind of did there. I said, you know, the price needs to be very close to the fast line. It needs to be also above the 20-day and even more so above the 50. So using basic filters like this, it's not perfect, but it's going to give me some ideas that I might not otherwise have seen, like what we were looking at earlier. That RFP was interesting. Nice tight range, and now it's starting to break out as the moving averages are coming up and the fast line is forcing the price higher, which is above the 20 and which is above the 50. Interesting.
Steve, can I ask you something? Why is the, just out of curiosity, why is the lowest value we're getting on the 8-day in there that you sorted it by is 4.6? It seems like we would find things that were hugging the...
Well, I think when I went in and I did some more changes to the 20-day range,
yeah.
that filtered out. I did have some stuff in there. And that's a crucial component, because what I was getting was stuff that was bouncing back and forth. No, I don't want that. I want you guys to mirror and imprint on this. This is what I want. I want a stock that moved, got above its moving average, and then got a nice tight range, and then the averages are forcing the issue higher. And so that's why my sort is to start with the one that's closest to the fast line, which is the 8 SMA. Also, HLIT was kind of interesting. So it's bringing up some interesting ideas. First night playing with it, just kind of a whim. But I wanted to share with you how you can take a thought, like, how can I get the moving averages to stack on top of each other and turn that into a reality? Well, take the configuration, grab the 3 main moving averages that we have, make the filters closest to the fast line, and then the next level, it needs to be a bigger value for the 20, and then even a bigger value for the minimum on the 50. It's not perfect, but it's close enough to where it's getting me some interesting stuff. I would be happy to share this one with you, Don. And again, sorting by the stuff that's really close to the 8. You know, if I double click and go here, this thing's 42% above its. That's not what I'm looking for, guys. This thing has already, you know, made its call. 60% above. This thing's already also made its call as well. I'm not going to chase that. I'm more interested in the stuff that's quiet, but getting ready to maybe possibly start making some noise. So with that said, we're not going to have time for charts requests, but I will drop this one into the cloud. It's just a starting point, and I'm glad you guys recognize the possible value in that. What did I call that? I called that SMA stacked tight range. That's what I'm typing into the chat window and then pasting the cloud, and there you go. All right, so that brings us to the top of the hour. Just let me double check and see if I haven't missed any questions. Do you have a tutorial that explains the conditions? Yes, the person who asked about the tutorial that explains the different conditions, looks like you were just answered by Scott. We have the one-on-one training, and it looks like he also dropped in the YouTube channel, which I'm going to do. It's a YouTube, we call it Getting Started. It's a 1-hour YouTube video, and since it was requested by somebody, I'm just going to go ahead and drop it in the chat window as well. I'm going to call it 1-hour YouTube. It's a really good getting starting video. 1-hour YouTube. There's your video in the chat window. Double check any questions we didn't catch. Got those. That was answering. Marrying earnings in a scanner. Yeah, you could marry earnings with scanner. Andy's got some good ideas on that. He actually, I think he's got a scan that uses earnings. However, let me just direct your attention. If you wanted to go to the earnings channel, we have a channel with earnings that you could go into, and you could grab some of those. Here it is. You could grab some of those scans that you might like. But what's typical about this channel is all of these stocks either have earnings coming up or have just had their earnings. So you could go in there, whoever asked that question, and explore some of the configuration settings as to how to use the EPS filter on earnings or earnings date, how many days away we are from earnings. So, all right, I'm just going to leave that as is, and I thank you all for your comments and questions. I'm going to bring up the slideshow again for Scott to show you all how to save some money. Go ahead, Scott.
Yeah, thank you, Steve. First of all, we do have a podcast. We're not putting out a new one this week because of the holiday, but you can subscribe and listen to last week's and the previous episodes and be all set for the next episode, which comes out not this Friday, but next Friday. Just search for Trade Ideas Podcast inside whatever application is your favorite one to listen to podcasts in, and hit the subscribe button. Then download the last couple of episodes and see what was on our minds the last few weeks. You might be surprised. We do have a discount code available for you. It works this month. It's the one from this webinar. Just use Alpha Trades, all caps. It is case sensitive, when you subscribe, and you can get 15% off your first month or year of any subscription. This is also good for upgrading from standard to premium. If you're going to do the upgrade, instead of going to the purchase page, you just go to your account management page, log in, and select Change My Account Subscription, and then use that code when doing the upgrade. If you're a new subscriber, just go to tradeIdeas.com/price and use that code on checkout. Thanks, everyone, for attending. Everyone have a great Turkey Day. There's no webinar tomorrow. Stay tuned for any updates over the weekend, and have a good, safe one. Email us info@trade-ideas.com if you have any questions, and we will have a recording of this webinar available later on tonight. You get an email reminder.
Sounds good.
Go ahead and follow Steve on Twitter while you're at it. He's at Today Trader, and our Jamie Hodge, another one of our educators, is at QuantBot. Dan Merkin, our CEO, is Trade Ideas 1, and we also have Trade Ideas and some other handles. So check us out, and you'll find all those. Find us on Facebook and like us there too, so you get some other updates there. And thanks all. Thank you, Steve. Thank you, Andy.
All
Yes,
right.
thanks, Scott. Happy Thanksgiving, everybody.
You too. Happy
Thank you.
Thanksgiving.
Have a good, yes, have a good holiday, everybody.
Happy one.
Thank you. Bye.